The form of taxes that are the most common, especially for the major sports, um, the and of basketball, baseball, and football, and hockey at the professional level, are selective taxes. So we're going to discuss these here briefly. First, one form would be a tourist tax, and this is imposed on the occupancy of hotel rooms and the rental of cars. The rationale behind this is that tourist visitors will be likely beneficiaries of sporting events, stadiums, and arenas. You can see some of the examples of facilities that have been paid in this way. 84% of the Houston Minute Maids Park came from tourist taxes. 60% of the Safeco Field, about half of the American Airlines Arena in Dallas, and 100% of the Florida Panthers Arena. One of the problems with tourist taxes is that in Chapter 6 we noted that spectators at major sporting events are usually locals. So this would be something that critics would use against tourist taxes. However, they are politically attractive for two reasons. In most states, they do not require voter approval. And number two, it transfers the cost to many non-resident visitors who do not vote on a tax increase and are unlikely to realize that the tax is underwriting major sports facilities. Another form of a selective tax is a sin tax. Sin tax is imposed on the sale of cigarettes, alcohol, and lotteries. The rationale behind sin taxes is that certain segments of the population do believe that they encourage a change in behavior that is undesirable. One of the conceptual flaws, however, is that if the incremental tax increase does succeed in changing behavior, then the revenue stream for redeeming the debt would be lower than anticipated. So there wouldn't be enough money raised using this type of tax if this rationale was used. Some of the critics point to the regressive nature of the taxes. First, those with lower income pay a disproportionate amount of their income to purchase these items. And second, the high price of admission to sports facilities that the taxes are used to finance makes it unlikely that these people will ever get the benefit from their tax payments. And you also need to look at the opportunity cost of sin taxes. For example, the cost of the sports facility is not paid for by the sinner, as it mentions in the book. It's paid for by the community who would have used the funds or could have used the funds from these taxes for more pressing needs in the community. Another form of selective taxes are Jersey taxes. These are somewhat theoretical. They've not been used to this point. However, the idea was brought up by the governor of Washington State in 1997 and proposed for Seattle's new stadium at the time. These are taxes imposed on licensed sports apparel and memorabilia. As I said, they're not implemented. They have not been implemented to this point. It was likely abandoned in that case from pressure from some of the sports apparel companies like Nike, who was a major player on the sports scene and is obviously close to the Washington border. It was also proposed later in the reconstruction of the Metrodome, but again, it was not used. Another form is player income taxes, also known as a jock tax. These would be imposed on professional athletes and support staff, which we'll see is something that many people don't realize. The rationale behind this is the benefit principle of taxation, which basically says that taxes are justified to the extent to which those paying the tax receive direct benefit. Obviously, improved venue is a direct benefit to the players, especially in the leagues with large revenue sharing agreements like the NBA and the NFL. So these players see a direct benefit because they get to play in venues and are benefiting from it financially due to the revenue sharing agreements in those leagues. They're established now exclusively by the use of what's called duty days, which are the days calculated under which the tax amount is used. This can be a large revenue generator for states. As we can see in California, there are 15 major professional teams, and California receives close to $100 million annually from visiting athletes. The critics of this tax claim that it is deceptive, arbitrary, and unfair in the following ways. First, it's deceptive in the fact that it does not indicate, or people don't realize that support staff like trainers, equipment personnel, broadcasters are also taxed under this player income tax. It's arbitrary because other professional athletes in the minor leagues are not taxed, and it's unfair because a specific occupation is targeted. Lastly, ticket surcharges is another method of taxes where stadiums impose, or owners impose, a ticket price increase that usually is between $1 and $3, or a percentage of the ticket price, and then paid to a public entity that owns the facility. There are about a third of the facilities in the 4 major leagues that have some form of ticket surcharge. The rationale is the surcharges are paid by fans who actually benefit from these facilities. However, the critics point to the small amounts raised by this method. So you can see how general taxes play a major role in the funding of facilities. And in the next section, you'll read on bonds how the taxes are used to create revenue for these bonds to exist in the first place.